Hi, thanks for joining me again. It's been reporting season in Australia for the last couple of weeks, and it's been quite an animated trading period. This is the period here where the reporting season has been taking place. It's been a little over 2 weeks so far, with just a couple of days to go next week. Initially, it can be quite difficult to understand just how the market is interpreting the results and responding to them. If we look at this example here to begin with, this is the regular trading here, and this is the announcement. Now, this type of trading would be where the market is buying the stock. They're relatively happy with the result and they're buying it. It's pretty straightforward. This result here, price is taken up as though the market is happy with it, and then it's clearly sold. This one would either be a selling bar if it's on high volume, or no demand if it's on very low volume. And then the market begins to fall, either deliberately or under its own weight. This market here is initially sold off and made to give the market a bad gut feel, as though the results are terrible. But then the subsequent trading, the next day, there's a large buy the offer bar, and then often a little test for supply, and then a continued buy the offer. And all of a sudden, price a few days later, not necessarily 3 days like this is just an example, but a few days later, price will be trading where it was before or even higher. And you wonder what was going on over here when the market initially sold off. And this was just a complete fake out to allow the market to buy more stock. Over here, you've got the opposite of the buying bar over here. This is just selling. It's a poor result. The market's interpreted it poorly, and the response is ongoing downside follow through. So really what you've got now is a happy market where they buy, a market where price is carried higher so it can be sold, a market where price is pushed lower so a buy the offer or accumulation can take place, and then a poor result and a sell-off. These are the 4 main examples that I see most commonly during this period of time, reporting season, half-yearly reports. And it is really, really difficult to understand exactly what's going on the initial bar where the announcement takes place, this first bar. It's almost impossible to know exactly what's going on. There's so many issues taking place, whether engineered or organically in the market. It's only the response over the subsequent days that will really tell you what's going on. If the market continues higher, it's probably good. If selling pressure comes in, especially on high volumes, it's possibly being sold into. If there's a complete reversal and a buy the offer situation takes place, it's most likely been engineered to push lower so that the market can buy it all back at a cheaper price, or buy back a quantity that is meaningful to the buyer. There might be almost no stock available, so it's initially pushed lower deliberately so that the offer gets restacked, and then they can buy that offer back up all in one go or relatively quickly. Or the market just sells off because it's not happy for whatever reason. So I thought I'd just go through some quick examples. This is BRG. And you can see this stock gapped down on announcement and pushed sharply lower on a really high volume. And then early the next day, this is a daily chart, early the next day, price continued lower. And it made it appear as though things were going badly. And then very quickly, in a day and a half, price pushed all the way back up again. And since then, it's been consolidating sideways. This is a buy the offer situation. This was a complete fake out to go lower. And all it really did was free up a whole lot of stock, which has been purchased on these bars. And since then, price is just consolidating and absorbing sideways. And the key level to watch is this level here. When that level is exceeded to the upside, price is likely to keep going higher, sort of like it was here. Okay, next one, QBE. You can see that price had been trending higher prior to announcement. It had gapped higher here. It gapped higher on announcement. And it pushed higher very quickly on high volume. But then the next bar, spread narrowed considerably. The close was well off the highs. Volume was still pretty high, much higher than the average volume. And the next bar was down. That was selling. There was a little bit of consolidation taking place here. It's a little bit weird. You might have had to see the trading that day because it looks like price has initially gone higher and then pushed lower. And then it's pushed higher the next day on increased volume. Very narrow spread again. The next bar was down. That was likely supply coming in as well. You don't know who's selling or for why, but you can see that this bar and this bar had selling pressure for sure. You can probably imagine this bar was full of supply as well, and prices then tipped over. And since then, price is trying to consolidate through here. Whether it'll be successful or not, we'll just have to wait and see. This looks like price was carried higher to sell it, or at least sell some. The next one is MFG. This is a financial group, I think. You can see that on announcement, price has moved lower, considerably lower, and it's pretty much continued lower since. There's an attempt to support the market through here. We'll see if that's going to be successful or not subsequently, but this looks like it was interpreted as a poor result, and whoever was selling wanted to sell, and they did so. And BPT, I imagine it's a little unfair because the crude oil price overseas has been moving lower just recently, but all the same, the half-yearly result come out and price has been sold into. It's gapped lower from the previous close up here, and it's moved considerably lower. And little gap there as well. And it looks like there's some sort of absorption or attempt to support the market going on now after prices gapped down a couple of times. We'll just have to see how that responds. But this has just been sold off, and it doesn't look like it's been sold off so that they can buy the offer. It's just been sold down. Car sales. You can see on announcement, it's initially moved a little lower on pretty high volume, and then boom, they bought the offer. Some supply was drawn out, and it closed below mid-bar, but the next bar was up, and price continued higher for the next 3 days after that. So the market was buying this. Now supply's been drawn out, and it's attempting to consolidate now through here, but there's no doubt the market bought this. It just got taken up. Looks like they tried to take it lower to get a buy the offer situation going, but it was too strong and just pushed higher immediately, and then gapped up the next day, just here. Whenever price rises sharply in a relatively short space of time, you'll almost certainly get some sort of supply being drawn out. And that's probably why the below mid-bar close was here. The supply will be some profit takers, people who bought down lower, or some short sellers. They're wanting to try to short the stock and see if they can get some sort of movement lower. Or you might have some trading to the left and it's letting people out. But either way, when price rises considerably in a short amount of time, you'll almost always draw out some supply. And in this case, that supply was just bought the next day and for the next 3 days following it. The next one is EHL. And you can see here was the announcement day. You can't miss these ones, very high volumes. And you can see that prices continued lower for the next few days. There was an attempt to rise here, probably from the open, but supply continued to come in and price pushed back down and then pushed down again the next day. And since then, you've got an attempt to consolidate the market sort of through there. We'll see what happens, but in this case, yes, price got pushed lower, but it wasn't to buy it. And you can see here was the previous close. So initially on announcement, it looks like price has moved higher and then it's been sold. So for at least the first short period of time, it was made to seem as though the result was good and price was taken higher before it was carried lower and sold. These are the tricks that go on in the market during reporting week or weeks. Here's CSL. You can see here was the previous close. Price probably went up to initially because the result wasn't considered too bad. But if the market wants to buy it, it's only going to push it up against itself immediately. So I imagine they've pushed it lower as best they could and held it down, probably using short positions to do so. And then, boom, the next day they cover their shorts and buy up the offer, and then they bought it up for the next 4 days after that. A low volume sort of test for supply, and then prices going up again the next day, albeit on low volume. So you can see price initially went up, it was forced lower, and then there was a big buy the offer period over the next week, 5 trading days, it was higher. Next one's BXB, it's Brambles, I think. You see price gapped up from the previous close. It spiked up higher, but it closed really poorly on pretty high volume. So I imagine that was selling pressure. I imagine it's continued lower the next day and then been carried higher. I don't think that's a buy the offer so much. You might have thought so at the time, but then the subsequent bar here, narrow spread up bar, even higher volume, is suspicious for sure. That shouldn't have such a narrow spread on that much volume if that was all buying. Narrow spread, close in the middle, quite high volume, is very suspicious that was full of selling. If that was really a strong bar because the market was buying it, you would have expected price to close up here somewhere like this, but it didn't. Next bar was some sort of test bar, and then down the market went, and now it's trading below the original closing price before the market announced. Now there is some support coming in here, so we'll just see what happens subsequently. but there's little doubt there was strong supply in this bar as well. RBL, red bubble, I think it is. And you can see the markets initially pushed lower and made it appear as though it was a poor result. And during the same day, market has pushed higher in response. Big buy the offer bar, a second buy the offer bar the next day. Some supplies come in on this next bar. I imagine price continued higher to start with, and then supply came in. But since then, prices continued higher again, and it's forming some sort of pennant by the looks. And the pressing nature to the upside here suggests that price will probably burst out the top, although we'll have to wait and see and look for confirmation on that. But there was big buy the offer bar after initially pushing lower, faking out lower, making it appear as though the result was poor, and now it's formed a pennant flag by the looks. So we'll just see what happens there. But you can see how the market plays games and makes it really difficult to understand what happens on the initial announcement. SHL, this is Sonic Healthcare, and the announcement was this bar here, and it was a complete fake to the downside by the looks. Mid-bar close, and you can see, just to trick you, there's been a gap up the day prior, and then price has rammed lower, but it's closed off its low, so there's been a bit of buying off the lows. Then market has gapped up the next open, and a buy the offer, but then allowed the price to settle in the afternoon, and then buy the offer, allow price to settle again during the afternoon, and since then prices continued higher. This was another buy the offer bar here, and then allowed to go down in the afternoon. All it is being unsupported during the afternoon period, and price just drifts lower because those who are in the market purchasing strongly during the buy the offer have stepped back, and without their buying pressure in the market, price just drifts lower and settles mid-bar to low on the bar. But you notice all these bars are pressing higher, and this is an indication of the buy the offer. They don't have to be a high close every single time. Quite often a buy the offer bar gets bought up and then it drifts lower and closes only average to where it appeared like it was going to go, because that allows another buy the offer the next day up within the original price without pushing price up against themselves too quickly. If they can keep buying the offer at the same level, that's what happens. But if there's not very much supply in the market does that same thing, but it keeps rising as it does so. And you get that pressing nature to the upside. Next one is MMS. It's Macmillan Shakespeare, I think. And it's pretty easy to see that this was the announcement bar, and there was no buy the offer in response. There was an attempt to support the market here, or some demand came in, but the next bar was down. And now you've got another attempt to support the market. You can see it's travelled well below the previous two lows, traded right down here, but closed back up in the top half of the bar. So there is an attempt to support the market, but you can see that the market did sell off, but there was no huge recovery like you've seen in some of those other stocks. This one was sold. SCG, here was the announcement to gap up. Now this one's a bit interesting, that you've got this shape Hopefully you can recognize it. It's a big W shape, which often means that there's been accumulation, and you can see that there's been buying on this bar, almost certainly. There's probably been buying on this bar as well. And then prices gapped up on announcement of the half-yearly reports. It's moved up for 2 days. A lower volume test bar, not a great one, but a test bar all the same, and then up again in response. So I imagine there might be some consolidation through here, at least for a period. And if that's successful, I think price might do this. Next one is RIC. You can see the prices gapped up on announcement. It's closed off its high. That's some supply coming in because of the sharp rise in price. But the next bar has continued higher on even higher volume. And then the next bar has been a little unsupported. You can see volume is back to average. It closed well off its highs. So this one's gapped up and been bought. There might be a period of consolidation now, sort of in here, form some sort of bull flag. And if that's successful, you might see price continue higher again. Okay. Hopefully from that you can see all the different shapes and sizes that happen in the market on announcement. There's tricks played for sure. Fake outs lower, fake outs higher, straight sell-offs, and buying. They're all mixed up together and almost impossible to know what's going on the initial announcement bar. Really, really difficult. Sometimes it's more clear than others, or sometimes you get the idea on what's happened quicker than others. But you really shouldn't try to second guess the market. You should always wait for the response, and that will generally tell you what's happened within a bar or two of the initial announcement bar. And that's why we're always looking for what the response is whenever we're doing our chart reading and we look at a questionable bar. Every bar should confirm the previous bar to some extent, and if it doesn't, you look for subsequent bars to confirm. And waiting for the response will always help you better understand what has happened in the market. There are times when trading requires you to make a faster decision, and hopefully your trading plan takes that into consideration. But on the chart reading side, you really do need to pay attention to the response and confirm your original thoughts or change your thinking if something's happened that doesn't make sense. That's the parent index, XJO. It'll be nice to see just what happens once this reporting season's over early next week. By Wednesday or Thursday next week, we should start to see the market stabilise to some extent. Volume should go back to normal. It's not as clear on this chart as it might be on others, but this is where reporting season started, was above average volume, and you've had above average volumes almost every day, and you can see that the average volume line is starting to rise too now. It was about here, and now it's moved up higher. So some of these volumes are really much higher than average, and it'll be nice to see some average volumes, and then we can get a better idea on how the market really has interpreted the results overall. At the moment, it's a little bit all over the place. Okay, thanks for your time. Hopefully that was interesting and worthwhile. Let me know in the comments what you thought. Thanks again. See ya.